got one question. Who's protecting your financial blind side? Who do you call? Financial defenders. Who do you call? Financial defenders. Pick up the phone. Financial defenders. Don't worry at all. Financial defenders. Call them the coach. Financial defenders. Call them big text. Financial defenders. Remember the name. Financial defenders. Don't worry, don't stress. Financial defenders. It's a defenders of finance show with your man, Big Tex Robinson, the financial defender, and Tim Haskins, the home loan coach, showing you the ropes with everything from financial planning, real estate purchase and refinance, business credit, and much, much more. So what are you waiting for? Get in the game.
Oh yeah, oh yeah, oh yeah, oh yeah. Day in the life with your man Big Tex. Who do you want to protect your financial blind side? That's right, it's the Defenders of Finance show, and we are back. It is on this beautiful April the 7th of 2022. I am your man, one of your hosts, Terrell Big Tex Robinson.
You got Tim Haskins, the home loan coach here.
And then we are the Defenders of Finance. Hey, thank you, everyone. I appreciate each and every one of you tuning in again for an extremely powerful show, man. Last week we had powerful guests. Next week we're going to have some more guests on. But today, the coach and I, we just want to bring it to you raw and uncut. So you know what I'm saying is we're going to bring the financial heat to the streets. So pull over to the side, turn your hazard lights on, take out your pen and pad, because we're about to get the busy. So the coach now, man, we just this past week, man, we had a great time. We both just celebrated our anniversary. Coach, it was 10 for you, correct?
10 years for me, yes.
10 for the coach and 13 for the defender. So we took our ladies, man. We went to San Francisco, we went to Napa, and we had a great time, wine tasting, and just kick back, relax, and reflect on how we've been doing as husbands, fathers, business owners, all that stuff. But while we're in Napa and while we're in San Francisco, you know, us being in the financial industry, we're just checking out everything. You know, for example, the housing markets, how people are affording, you know, this house, or how people are affording this house or this vacation. And just, I mean, coach, man, I know you saw it. It was crazy in Napa, the numbers, man. I'm like, so who is their financial advisor that puts them in the position to allow them to be able to afford this 1,700 square foot house going for $2.6 million? You know, so all kinds of stuff like that. What did you get from it, coach?
Well, first of all, I'd like to say it's good that we took a break. Sometimes you got to stop and smell the roses. You can't just work all the time. So it was good to get away and refresh and come back better, you know, a little bit better to serve the community, bringing that financial heat to the streets. But yeah, Napa is a beautiful place, beautiful weather, wine country. And it was amazing to see. We met a lady out there that bought her house 62 years ago. Been in the house 62 years. You know, paid $23,000 for it, and today is worth $2.3 million. I don't know who's advising them, but I would ask people to contact the Defenders of Finance and get some advice so that they can. You know, be able to afford property like that. There's various different products that you have, Big Tex. I can coach them into real estate investing. That's a great way to make a lot of income on a large scale and passive income. Man, but it's awesome to see people out there, you know, that can afford that type of property in that type of area.
Right. And you know what? Think of it. And ladies and gentlemen, think of the equity that she has in that property. With the equity that she has in that property, man, she can buy fourplexes. She can put down on an apartment building in some states, because I'm from Tyler, Texas, one of the rose capitals of the world. And we have apartment complexes down there that's going for $750,000 to $1.5 million. She can actually be able to purchase something like that at 80% occupancy and make one heck of a passive income that she can pass down from generations to come. So, ladies and gentlemen, I'm telling you, even with this inflation that's going on out there, the rates are climbing. The housing market is doing what it's doing. Again, you're on the line with the defenders of finance. You got the home loan coach that's going to coach you through all your real estate wants and needs. We always focus on the word, well, I need, but what about your wants? You know what? Like we were talking, some of those people out there, that may have been their second, third, fourth, fifth home, because they actually did the things that they're supposed to do earlier in life that put them in the position to buy a house out in Napa or buy a building out there in Napa. And when we stopped at the painting, the art gallery, the gentleman said the art person that owned it, he lived in London. So selling paintings for $13,000, $20,000. He reached out, by the way. He reached out, by the way, 5 paintings that he thinks I should purchase. So I'm gonna have to give him the bad news on that. But just the different various things that are going on. So, Coach, I wanted to talk about, in regards to real estate. I heard you talk about what's going on now with the median. You said the median home prices in Las Vegas was how much again?
Median home price is about $460,000 to purchase a home here in Las Vegas. So what I want to do is, coach you a little bit, give you a little bit of insight. Everybody's situation is different. So in order to really, really know your direction for home ownership, whatever your goals may be, you have to, give me a call and we can sit down and have a no cost, no obligation consultation. I can be reached directly at 661-992-7005. But here's the deal. There's ways to combat the interest rate. You can buy your interest rate down. We would discuss whether that's wise to do or not. But yeah, the key to purchasing real estate right now is save your money. Put your ducks in a row. If you already have a home, and you should have quite a bit of equity in it, if you're going to be taking equity from one home and putting it into the next home, then it's just about structuring it properly, the right down payment, how much you're going to put into buying down your rate to make it affordable for you. But, the days of having the seller pay closing costs, that's slim to none. So you got to be prepared to pay your closing costs. If the interest rates are high, down payment assistance rates are even higher. So if you can use down payment assistance, if you do choose to use it, just be prepared to pay a higher rate. The programs are still there, but it's more advantageous if you have your own down payment. That's where, Big Tex comes in and can teach you how to manage your finances. Maybe you can get some money out of a 401k, any type of retirement vehicle.
Right.
Yeah. So there's other ways to do it. You can still purchase, but I don't want to, give you false hopes that you can buy a house with no money down. You're going to have some money in this market.
Right. And another thing too, ladies and gentlemen, look, if you have a 401k, if you have a Roth IRA or traditional IRA or, just money and savings, and if you are a first-time home buyer, you actually can use those monies for the purchase. Coach, that's how I actually bought my first home in 2003, bought a condo for 101, and I used that money from my Roth IRA. And ladies and gentlemen, I did not get penalized for using that money. I was a first-time home buyer. I was able to buy my first condo, and a year later, I was able to maximize and take out $100,000 of equity to purchase my second property. I didn't take out the full 100, but I had $100,000 in equity. Think about that. In a condo, basically an apartment, in 1 year, in 2004, it was exactly $98,700 in equity. So I took out $55K, and this is what I did, ladies and gentlemen, justified. I took out $55K and I paid off all my consumer debt. So my car note, credit cards. I did have one student loan at the time before I went back for the master's. And I had some other consumer debt too as well. At that time, wasn't major large, but I was around about $1,800 a month. My mortgage payment went from $591 to I want to say $801. So I still had a roommate paying $600 a month. So at the time, so I'm only $200 out of pocket. But I was putting $1,600 a month back into my pocket, which my mortgage payment at the new property was $1,475. So I still made out good. Now I'm in 2 properties because I leveraged the equity out of the one property put it into the new property. Now I got 2 properties that's working for me. So that's what we can do from here. So look, 702-751-5865. Again, our number is 702-751-5865, or you can go to defendersoffinanceshow.com. Please put in your name, your email address, the information that caught your eye or your ear, that you and the person you want to be in contact with, so we can get back to you and we can sit down, set up that free consultation for you. And look, I'm, at TDR Financial, I'm the owner of TDR Financial, and we're a non-captive broker. So as non-captive brokers, that means we get to work with all the finance companies out there. I work with Athene. I work with Fidelity and Guarantee. I work with Mutual Trust. I work with Transamerica, just to name a few. So not a one-size-fits-all type thing. Well, in regards to making your real estate purchases, or if you're looking to right now purchasing a vehicle, if you're not in a position, you got to strategically sit down with one of us in regards to purchasing a vehicle, because of the demand, what supply and demand, coach, right? The supply is so limited. So now, and the demand is high, so the prices are going up. I mean, now people are getting Honda Civics right now for $45,000. Well, they normally get them for $15,000. So it's crazy out there. So one of the big things that we're also doing now is very important for those who are getting ready to step in, who wants to step into retirement in the next decade. We have a phenomenal fixed index annuity program that is allowing you to get 20% off the bonus. The bonus means, or off the premium. That premium means whatever money that you move over. So if it's $50,000, 20% right there, you just made 20%. And you make a guaranteed 10% on premium every year up to a decade. Now, also, you have a zero floor. So think about that. You're making some money. Your money is gaining. You're protected against the market. And eventually on down the road, when it's time for you to say, hey, I want to kick up my old ashy feet, you get a guaranteed check for the rest of your life. So a lot of people, look, so many things out there that we can go over with them, coach. But I'm telling you, if we do not implement if those don't implement what we put out there, and it falls on deaf ears, then all we do is our consumer debt in America is so high. It's larger than just about any other country out there, because we don't have it, but we swipe. Because there's no plan. No one sat down and say, hey, let me just go down and sit down with somebody to see if I can put even that much of a budget together. My wife came home yesterday and said she had went to the store, and these turkey bratwursts that I like, they're like, it's like a turkey and cheese or something. They normally cost $2.98. She said they were $4.29. Man, that's $1.31.
Mm-hmm.
So inflation is at all-time high within 40 years. And the incomes aren't tracking it. So if you have real estate, you own real estate and I know you should have equity in that property, why aren't you taking advantage of that equity? You need to contact the coach, 702-751-5865, 702-751-5865, or go to defendersoffinanceshow.com, or contact him directly. Let's forget going through the wires and the assistants and all that. Coach, how can they directly contact you?
Contact me directly at 661-992-7005. And I want to piggyback off of what you're talking about here. The hot topic in real estate right now are the interest rates. Interest rates have gone up. We were in the 2% range when the economy was totally in the toilet. 2% range. And, so I want to say this. If you need to purchase a house to have a secure, safe home for your family, where you don't have a landlord coming and knock on the door and say, hey, I want to take advantage of my equity and sell, you got 60 days to get out, then I don't care if the interest rate is 5%. I don't care. You need to put your family in a home. So let's just get over it. Let's get over the fact that the rates have gone up. They've gone up. They weren't going to stay 2% forever. So this is where we are. If you need to purchase a home for your family, purchase a home for your family. Secondly, if you have a home already and you have taking advantage, or I should say, you have a large amount of equity in your property and you need to take advantage of it, sit down and have a consultation, because there's no cheaper money out there. I mean, somebody please chime in. Tell me where you can borrow money uh, at a lower interest rate than on a cash out refinance on your home.
Right.
Okay. The interest rate has gone up to, substantially. You're in the fours, sometimes in the fives, depending on your credit score or what loan to value you're trying to borrow up against. But where else can you borrow 5% money? Tell me where you can get money as cheap as 5%.
Right.
Unless you're dealing with one of Big Texas products where you can get at
Right.
then there's no cheaper money, but you got to get that set up. So if you have high interest credit cards, if you have high interest vehicles, get yourself in position now. There's a lot of scare tactics going on. People saying, hey, we're headed for a recession. Doom and gloom is coming. Well, if that's the case, prepare now.
Right.
The saying goes, if you fail to plan, then plan to fail. So don't wait until your equity drops out of your property. Take it out now, and don't go on a vacation with it. Pay off all your debt. So if the situation does come where it's doom and gloom, at least you have no debt. You raised $1,500, $2,000, $2,500 worth of monthly payments, and now you got that money at 4 or 5% from your home. And if you're disciplined, you can take that money, put it in another vehicle, and have it gain interest. That's where the consultation comes in at. So, I'm not with the scare tactics. I really believe in the saying, it is what it is. So if interest rates are at 7%, oh yeah, I mean, it sucks that you didn't purchase or you didn't refinance when it was at 3%, 4%, 5%. But if that's what it is what it is.
It is what it is, Coach.
You're not going to change it. So if you got a credit card at 20% interest and you got a vehicle at 15% interest and you have these debts and you can pull out money out of your home at 5% interest, it just has to make sense. Everybody shouldn't pull money out of their house.
Right.
I'm not here to sell cash out refinance.
Right.
But we need to look at your situation and see if it makes sense.
Right.
That's all I'm saying. But we cannot change the fact that the rates have gone up. So we can waste time talking about the problem, or we can put our heads together and figure out the solution.
There you go, Coach. That's touchdown right there, Coach. That's touchdown. Like, right? Seriously, we can, and that's what's going on with the word, man. People, stop talking about Will Smith, man. Stop. I don't care about that slap, man. Stop focusing on that, because if so, then you take away from all the other good stuff that did happen. So we're not going to focus on the interest rate. It is what it is. We know that rates, what goes up must come down. So, we know that rates are going to go up. That's okay. You should have been prepared for that a long time ago. When you bought your house at 3% or 2% interest rate, you knew that rates were going to go up. Now, if your debt went up, you ain't got no choice. You need to be making some smart financial decisions. I'm sitting with the client yesterday, and the husband's ready to pull the trigger and refinance. The wife is scared to pull the trigger and refinance. She rather keeps the $100,000 in doctor bills and credit cards and car payment, and keep the 2.9 or 3% interest rate. Now, that doesn't make any sense to me. And then on top of that, at some point in time, your equity is going to stop moving. It may just stand still, or it may start going in reverse. So now, let's take your next door neighbor. Your next door neighbor has the same financial issue you have, a lot of consumer debt. But your next door neighbor says, we're not going to operate in fear. We're going to pull the trigger. And I'm going to go ahead and sell my house for $55,000 or $75,000 less, just to be able to get out, take some cash, and pay off the debt, because our credit is not good enough. And that's another thing, ladies and gentlemen, what's going on with your FICO scores. So our credit's not good enough to do a refinance, so we need to sell. So in order for us to sell, the buyer is now in control. So we want to sell for 400, but he's not going to give us 400. He said he'll give us 350. Now you take the hit, all because you didn't make the move. Now you mad at him. You can't be mad at him for getting for that couple for getting their money. You can't be mad at them. So that's on your fault for being stagnant and not operating and moving. So now move on to, before you come down and sit down with coach and you're ready to purchase or refinance, what's going on with your credit? And we mentioned this time and time again. Honey Bear's on the sideline waiting for you guys. 702-751-5865. And look, we used to talk about the 550s and the 580s. Look, if you want to get with the coach and you're ready to purchase, well, you need your score at coach. Do you have a particular score? I know you want them over 600. You don't even want to talk about the 5.
Right. So let me chime in on that a little bit. Everybody is concerned about interest rate. I mean, it makes sense. You know, we all want the lowest rate. I get that. But we got to do some things to prepare ourselves for that. You can't come in with a 580 credit score and say, hey, look, I want the best rate. So prepare yourselves. This is a great point. Go ahead and make the investment, not cost. Make the investment in your financial future. And get some credit repair if you need, get some credit repair if you need it, and get that fixed. If you consider rates high now, well, you're going to take an even bigger hit with a lower credit score.
Right.
We can get you into a home loan with a score as low as 600. But you won't like your interest rate at 600.
Right.
You should all strive for at least 720. Strive for 720. I'm not saying don't buy a house if you have a 660, 640. Those are decent scores. We can get there. But, why not reach for the stars?
Exactly.
720 is where you would like to be. And, if you instead of the Starbucks or the club, the concert, whatever, take a little money and invest in your credit. A lot of times we don't find that important until we need it. And that's too late.
Yep.
That's too late.
Yep.
You need to invest in your credit before you need it. So You're ready. If you stay ready, you don't have to get ready.
You ain't got to get ready. And look, and sorry to cut you off, Coach, but look, a lot of you who have vehicles out there, you have car insurance, you have health insurance, and that's just being proactive, preventative. So why not get your credit where it needs to be? So in time, when it's time to use it, you in position that you can make the calls. You have the leverage. You have the upper hand. So, ladies and coach just closed the file for us. Honey Bear put a client through the credit program. They followed everything that she told them to do. They had a coach. They had the 550. I know they had 550 FICO scores, both husband and wife. When y'all pull that file, coach, that credit, was it back in February?
Yes.
Yeah, they pulled that. So now 4 months later, the couple was in. The wife had an 815 mid score. The husband, I think, was like a 798. So just by saying, hey, we want to refinance and we don't have the credit to refi, what do we need to do? Put them in the system. They follow the plan. Now they're in the 800s. They paid off all their consumer debt. They've opened up their banks, and I forgot. I got to call them now because their son, their 9-year-old son, bank just got approved a couple hours ago. So I got to call them about that. The daughter and the wife is almost done. They've opened up their banks. They've paid off their consumer debt. The monies that they were paying into the consumer debt, they're now going to be putting it into that family. And so now, 20 years from now, what do you think the son and the daughter is going to look like? Hell, what do you think the mom and dad's going to look like? And guess what? The house is going to be paid off. So the 30-year mortgage, but it's going to be paid off in under 9 years. So this is the plan. And they're a young couple. They're 42. So by the time they're 62, ready to, take that trip to Hawaii, they don't have to worry about, the mortgage payment is due on the 1st, so we can't go this month. Let's wait till next month. They didn't have to worry about that, coach. All because you got them the right interest rate. You got them the refi that was able to take care of all their consumer debt. 702-751-5865, 751-5865. You need to contact us so we can sit down and put some type of strategy. Look, the oldest form of wealth, everyone, is real estate. The cheapest form of wealth is life insurance. You need to have both of those things working simultaneously. I don't care who you are. And if you can't afford to put yourself in a position on the savings part, at least get something to say, hey, loved ones, I love you. In the event something happens to me, you're not going to have to worry about my car, my student loans, the credit cards. We're going to be able to take care of all those things and leave something behind for you. That's very important. And we don't think about that. And here's another thing, too. All of you out there that do have something set up. This one thing I thought about this, man, just a few days ago, Coach. And even myself, when I was in the hospital, you need to sit down with your wife and your children. Hey, honey or hubby, if something happens to me, this is where the will and trust is. This is where the power of attorney is. This is where this is. This is the login and the password. Because when I was in the hospital, even me, ladies and gentlemen, I make mistakes. When I was in the hospital back in July, my wife was trying to figure out if something happens to him, shit, where's the treasure buried at? I know some things, but I don't know all the things. So even me, I'm like, hey, here's the list of the things that I have set aside, from Merrill Lynch to M1 to Mutual Trust. Here goes the logins, websites, passwords, boom. Now it's something she knows exactly where to go, and vice versa. I know exactly where to go. So that's very important. Very important. I know hubbies, some of y'all want to hide your little, and especially them wives, they want to hide them little $3 they got set aside, Coach. They want to hide it. So in the event something happens, man, we need to know the right papers to be able to grab, so we're not scrambling. And that's what happened to my family members in regards to just recently. My uncle just passed, and now everybody's scrambling. They're scrambling. Uncle didn't tell nobody where it was at, where the treasure was buried. So that's my little piece on that. Coach, you got it?
What I want to say is I'm going to put you on the spot real quick, Big Tex, because you just touched on something that is very near and dear to me. And I want to, say that everybody out there listening, if you don't know, Big Tex has a show on KCEP 88.1. I believe it'll be live airing this coming Monday. And I want to go on that show. Our time is about up now. I want to go on that show and give you my personal story of why you need to contact Big Tex, the financial defender, in regards to this will and trust planning, Medicaid planning, if you're in California, Medi-Cal planning. But if you're not in the Las Vegas area, they have an app that you can tune in and listen to it. Big Tex says Monday at 10:30, right?
That's right. Monday, every second, third, and fourth Mondays at 10:30 a.m. Pacific time. So if you're in Texas or Florida, that's 12:30 and 1:30. But yeah, and if you're not local, you can download the app KCEP 88.1 FM. It's free to download, free to listen. So this Monday will be powerful because he's going to tell you about what we were just talking about in regards to the will and trust, having things in the proper place, so it lessens the blow and the burden on the loved ones left behind. Coach has literally experienced it. So please tune in on Monday at 10:30 a.m. It's going to be powerful. It's going to be powerful.
That's 88.1 KCEP. If you're not in Las Vegas, please download the app, listen in, because we're gonna bring some more financial heat to the street. And this is something that's going to be dear to a lot of people in our community. We need to get ready. So, that's about our time. Big Tex, take us out. Tell them about.
That's right. We're about to. Hey, that's it. That's right. Who do you want to protect your financial blind side? Hey, thank each and every one of you for tuning in. Guy Dawson, he is behind the scenes doing his thing. PR Connection Radio, we really appreciate you hosting us and allowing us to come on. We'll be back next Wednesday, but make sure you tune in, KCEP 88.1 FM. And I want to say that's on the 12th at 10:30 a.m. Pacific time. Coach is going to come on and he's going to give a powerful testimony. So please make sure you tune in. and download the app too as well. So that's our time for the day. We're logging out. I'm your man, Big Tex Robinson. Tim Haskins, home loan coach. And we are the Defenders of Finance.
Defenders of Finance.